Everybody. Welcome to the Industrial Insights podcast. Today we have Eric Ruehle of West Harbor Capital. Eric, I remember meeting you outside the Canary property. That is an
Yeah,
old property in La Mirada. You were working for Sitex at the time and young hustler, hustling up deals. I'm excited to see all your progress. You've come a long way.
yeah. No, I
So,
appreciate it. Thanks for inviting me. It's good to be here. We're, I would say, I don't want to say older, but you've been in the industrial world for a while now. There's been a lot of new entrants here as it's become more of a desired asset class. So yeah, we've come a long way here.
yes, it's not a secret anymore that there's a lot of good things going
Super
on
right.
in industrial. Perhaps West Harbor, who are we, where'd we come from, and kind of what's our general makeup? Maybe that's a great place to give people a start.
So West Harbor was founded in 2017 by my partner Adam Deerling and I. Adam is a former broker with CB and Colliers. He worked focused on the mid counties, but worked throughout Southern California, and then went over to Black Creek Group, which is now part of. So we linked up and we've been friends for 20 years. Kind of similar to our trajectory, done business together. And we're friends personally, and so linked up in maybe prior to 2017. We're talking about it and saw a market opportunity, our skill sets. My background is more on the institution, has always been on the institutional side, all the way back to 2004. I came into the business with AEW, and I got some great experience there on the asset management side, and then jumped over to First Industrial not long after that, and have been in industrial since 2005, 2006. And
Yep.
so yeah, I've been always, was always more so focused on the acquisition side, Adam on the asset management side, and
Yeah.
obviously his brokerage experience really valuable. It's we came together in 2017 and been working hard at it since then.
The rest is history. And you
Yeah,
got him out of brokerage, or maybe with brokers, you rescued him from brokerage, depending
yeah,
on who you ask and how you look at it.
yeah, yeah. He was he had left brokerage to go to Black Creek prior to us starting West Harbor, but yeah, he had spent an extensive amount of time in brokerage before that.
It was re-education.
Yep.
And then first couple of deals, cobbling them together. What was it like getting those under contract and raising the money and figuring out like a strategy?
Yeah, it's a great question. We were talking to various institutional partners, kind of trying to perfect the capital side of our business, and then we're able to really put together some great partnerships, both on the institutional and the private capital side. Our first deal was actually with some lead guys out of Orange County. Brad Schneider led the charge there and did an amazing job and trusted in us, which, as you can imagine, a group without a track record. And convincing.
I can do it. Give me a chance.
Yeah, this could be a chance. Put me in. So it was an adventure, and both Adam and I had good institutional experience, but we were focused on our specific parts of our business or our skill sets, and all of a sudden you're responsible for everything from raising the equity to and the raising the equity and the debt, to working through the diligence and signing on the guarantees and investing our own dollars in that too. So it was some sleepless nights, as I mentioned, thankfully it was an interesting deal that we felt confident we were buying right. And so yeah, got off to a good start there with the Forbes transaction in Garden Grove. And then not long after that, closed on our second deal, which is 100,000 square feet in the South Bay, that we converted from an older 1970s vintage manufacturing building into a final mile or port distribution facility. That one was a heavier lift on the physical side. Again, we were excited about the opportunity, and we're really thankful for the brokers who again trusted in us. And again, it was ironically another lead broker, Trugger Olson out of South Bay, who entrusted in us and did a great job ushering the deal through. And as you know as well as I do, no deal goes without surprises or challenges, and so working through those on the diligence side. We're thankful. Timing in the market was good in 2017, and as I mentioned, felt like we were buying it right and had good capital partners, and felt like our experience on the side of understanding risk and mitigating some of those challenges, whether it be physical or environmental, leasing or redevelopment, felt like we had those encapsulated. So wasn't without sleepless nights, but thankfully they turned out.
Yeah, I love your can-do attitude every time we underwrite a deal of like, here's what it really is, here's what we can do, here's where the risk. I feel like you're quick, like a quick study of like underwriting and like really getting to like the heart of where the deal lies. I've always really appreciated that as we go through deals. How many deals are we at now? How many would you say you've closed on total? Because we've gone from raising money per deal to a fund now, and maybe to a second fund or coming
Yeah,
up.
we're working on that now. We're actually exploring some, and this is kind of ongoing now, exploring expanding into other Mountain West or Southwest markets, Phoenix, Las Vegas, and Salt Lake City, to name a few. So we're spending a lot of time on that, understanding the supply demand fundamentals and the challenges both on the real estate market side, but then also what that means organizationally for our team. Are we able to effectively execute? Because there's a lot of smart people in all those markets. There's a lot of capital that wants to be in industrial in all those markets. And so, can we add value for our stakeholders, our investors, and can we deliver attractive returns? Thankfully, we've got past experience in those markets, working with, reconnecting with brokers, introducing our platform, what we do well. As you mentioned, and how we look at deals, I think part of our, I don't want to say advantage, but what we lean on is we make 3 to 4 offers a week. So it's a heavy shotgun net mentality. And so with that, it's a quick evaluation of, is this an asset we want to own? How do we feel about the risk, and how are we properly accounting for that underwriting? So that's kind of top of mind right now, in addition to some other deals that we're working on.
There's nothing like the first time you go into a new market and you figure out like this is different than what I know. How
Yeah,
is it different? Why is it different? Who is different? Who's the same? What's the
yeah,
same? And like going through all that. But I feel like the longer you're in the game, the more you can take a regional and national approach, the more you can like fit the pieces of the puzzle together of why are those interesting markets, and how do you drive value in those different
yeah,
markets? So it's
yeah,
exciting to see you go into those. Do you
yeah.
have a favorite so far? SoCal will always be your favorite.
Yeah, SoCal is definitely our bread and butter and will be our primary focus, not only because of size, but market fundamentals. We think, the barriers to entry are really attractive, and
Yeah.
they're attractive for those of us who are in the market, who know it, have, really good relationships. And so we feel like we have that competitive advantage against some of those that are maybe coming into industrial, coming into the market. With that said, it feels like anybody and everybody has a presence, an office, definitely a dedicated investment and asset management professional for the market. So it's definitely becoming more efficient, but it will always be our favorite. I'll get back to you on that. I think there's pros and cons of each. I think, Phoenix is a very dynamic market with what's going on with not only on the logistics and e-commerce side, the population growth.
Semiconductors.
Yeah,
Yeah.
the high tech manufacturing and the amount of investment that's going on with, some of the top line news with um, Intel and TSMC, but then also, that's the top line news. But with that, there's 10 to 12 other manufacturing companies. For every one big one, there's 10 to 12 other ones that are popping up, that are either related or are just moving there because of some of the demographic trends or advantages. I think Phoenix is really interesting on that front. Phoenix has a large amount of new supply still coming out of the ground, and will
Oh yeah.
continue into 2025. That in some ways doesn't directly affect our strategy because, as we're more of a infill value add shop and not as much of a path of growth developer. But it always has some trickle on effect. And Salt Lake has much less of that new supply challenge, relatively speaking, compared to the size of the market. The smaller market, more of a,
I was going to ask you, like, how do you describe it? Because I have not done deals there yet. I looked at a couple, like, assignments with clients, but no, like, active, like, had to really, like, dissect it, where I feel like I got a pretty good handle on Las Vegas and Phoenix. Yeah, it'd be great to hear more about, like,
yeah. I
the
mean, it has.
dynamics.
I'm definitely not the person to ask. I'm just learning. I'm spending a lot of time on it now, in addition to executing on our existing portfolio and some of the deals we have in the pipeline. But so I will by no means pretend to be the expert.
I'm-
But our read on it is they're a little bit different than Phoenix. There are barriers, physical barriers, the mountains, Salt Lake, zoning, that are not as doesn't create creates more land constraints than if we're comparing it to Phoenix and or even Vegas for that matter. It's a much smaller market, both in population and industrial base. And I think it operates more as a local hometown market where there are local investors who are there who do really well and have done well there for a long time. Whereas Phoenix, I think, is because of its size, is more of an institutional market. Again, comparatively speaking, they're both institutional markets. And then Las Vegas is a bit in between there. Las Vegas has got, again, all three have the population growth. I think all three are 2 to 2.5 times. If you look at the projections for population growth, 2 to 2.5 times, going 2 to 2.5 times faster than projected U.S. population growth. So some demographic trends that are interesting. But we like all three, and like I said, I'll let you know as we go along. Probably where we buy deals, I'll say those are our favorite markets because you got to support your
No
home team.
doubt. Yeah, that's awesome. I'm excited for you. And then capital markets, right? Like you live and die by the flow and knowing what is like where there are opportunities and how expectations have changed. It sure seems to me like we had everything seize up for a while. We had this big bid-ask spread for a long time that most would say is still healthy and out there. Like it never, prices didn't reach expectations. And now people have like confidence again, although it's still murky on how do you underwrite the exit and like seeing a little further out. What's your experience been and what are you seeing?
I think you hit the nail on the head. It feels like we're coming around the corner here in the capital markets. Started to climb in the first half of 2022, and they've started to now taper off in the first half. I mean, they bounced around, but generally the trend had been up and started to come in a bit here in the first half of 2024. I think the 10 years down like 90 bips in the last 4 months, and Powell's comments today at Jackson Hole seemed to solidify a drop in the federal funds rate at their September meetings. Feels like we're coming around the corner there. Cap rates on the industrial side seem to have stabilized here in the first half of 2024. Hopefully that remains the same and provides some clarity on underwriting. To your point on the exit, I think we went through this period where starting 2022, everybody felt good about their leasing assumptions, and they were really uncertain about where the cost of capital was going to be, where the cost of debt was going to be, where their exit cap was going to be. It's not an absolute, but it feels like we're almost turning the corner on that, where leasing fundamentals remain stronger or longer after 2022. They are now softening a bit. If we're talking about Southern California, especially, less certain about leasing assumptions in your new underwriting, maybe more certain about your debt assumption, comparing the two. Not absolutely certain in either. And so I would say, just to kind of, close the loop on the capital markets, it feels like, debt coming back in the originations are up. The capital markets feel like they're stabilized. There's plenty of equity on the sidelines ready to pile in to industrial, especially the allocations for industrial within the real estate sector are up big time. It's been a substantial leap even since we started the company in 2017. Capital markets, net look like they're heading in the right direction. On the leasing side, the story is playing out here a little bit later.
It's one thing or another, right?
Yeah,
Nothing stays too stable for a period of time.
Exactly. My grandfather was a farmer, and he used to always say, if it's not one thing, it's another. So that definitely rings true today in the industrial real estate world.
Yeah. And so, leasing. Do you have any deals that are in the middle of lease up or just completed lease up?
Thankfully, we don't have a lot of vacancy. We had a couple vacancies in the portfolio. One of those just got hopefully inked here this week. I don't want to jinx it, but I think we're there.
Friday.
Friday close out the week. And so our vacancy across our portfolio is pretty low, but we are looking at, a number of deals in our portfolio have existing vacancy or near-term roll too. So paying close attention to the fundamentals. I think high level, and we're coming off a bit of a hangover from the COVID spike, and we're working to normalize. I think the market is working to normalize where those rates should be, and it's going to be painful for a period of time here. So I think Southern California has been an early mover on that relative to some other markets that will maybe feel it a little bit later. But long term, we're bullish on Southern California because of the mid to long term trends the ports have been doing well as of late during 2024. I think July, they just announced they had their best July in the history of the Port of LA. Total volumes are up, I think, in the high teens over the last 12 months. All that heading in the right direction. E-commerce will continue to grow, especially as millennials enter more of their spending years and are definitely active on buying online. So I think long-term trends would feel good. Short-term, we got some work to do.
And you're not in the bulk space, so you probably got to miss out on most of the pain of like the
Well,
200,000 footers.
yeah, we maybe miss out on the pain today, especially I'm sure you're referring to the Inland Empire, but they had a great run. I don't think
Yeah.
it was tough to go broke if you were investing in bulk space over the last 5 to 10 years. In the current moment, it's tough, but if you bought a deal 5 years ago, you're, I would imagine, well ahead of your underwriting.
We're not too worried about those guys. They
No,
seem to be
no.
doing just
Yeah,
fine.
yeah, exactly.
I love it. Going to the space you do play in, what would you say is like a bread and butter deal? Like what is like an average like a size or like a turnaround business plan? What's like a good example of what you look for?
So sizing our bread and butter, I would say call it a middle market investor. And to us, that means total deal size of 10 to 50 million dollars. We can do bigger. We've got institutional partners that are more than willing to go bigger. Bigger is better.
Yeah.
But as you get bigger, the market gets more competitive from some larger REITs and private equity funds. I would say bread and butter is 10 to 50 million. From a strategy standpoint, we're a value add shop. That's in our DNA. So we're always looking to add value by solving a problem or on the buys. First and foremost, the first leg of the stool is to look at on the buy, are we buying it right? And that's not always just buying it cheap. Are we setting the right business plan and the right capitalization structure? For example, we acquired a deal. This isn't honestly a plug for Lean Associates, but again, with
The third plug.
I know. Almost a deal in City of Industry. We closed right at the end of last year with Stephen Morris and Eric Parkhurst in City of Industry. They're out of your office. Great guys. Again, did a great job of shepherding the deal through, but closed had in-place vacancy below market lease rates. So when I speak about capitalizing right, close that all cash, are able to be nimble in regards to the execution of the business plan, and we're able to close quickly because the seller had a year-end focus and some tight constraints on that. So our team did a great job of moving quickly and completing our diligence and closing it on, I think, the final business day of the year. I think it was the 29th of December. So buying it right, setting up the right business plan, capitalization, and then executing the business plan post-closing, whether that's a redevelopment, repositioning, or riding out a below market lease or buying vacancy. One of the things, our success is primarily driven by our relationships in the market. First and foremost, our relationships with the brokers in the market. Many of the brokers I work with, I call personal friends. And so that helps with the first component of it, of finding the right deal. Obviously, in some cases, getting attractive pricing.
Would you buy this?
Exactly. And then second, once we close and they're representing us on the leasing side, their network is valuable to us, and seeing around the corners of who are the tenants in the market and who needs this kind of space and maybe position it well so it's a win-win for the tenant on their timing, their TIs and build out. So you're investing dollars that they see value in, and hence you may be able to enhance your lease rate. So our relationships on both the buy and execution are driven by the brokers. We're entrepreneurial when it comes to the third leg of the stool here, and adding value beyond the buy and execution in the business plan is the exit. And so our general hold period is 3 to 5 years. We're typically, buying asset, solving a problem, or executing the business plan, and selling. And so whether that's a user sale, you're rolling up into a portfolio with other like-kind assets, or just a one-off transaction to interested investors in the market, making sure we hit on each three of those is really our focus, and looking to drive above market returns for our investors.
No return until the exit. And getting into a deal is not the same as getting out of a deal. No doubt about that.
Yeah, and you mentioned, would you be an investor? If a call to the broker, would you be an investor in the deal? The other part to really solidify that partnership and is the brokers that bring us off-market transactions. We give them sweat equity in the transaction, and then also the ability to invest in it. So that's one focus of ours going forward. We want to make sure we're putting our money where our mouth is. God willing, we're going to be in this business for a long time, and we want to be able to celebrate those wins along the way with the stakeholders, the brokers, the partners that drive the performance.
Yeah, I love it. There's nothing like being in it together to
Yeah.
change how you see things. And then favorite ways to add value. I love that you like there's issues and problems with properties and with like estates that hold properties that you look to solve. Could you have any favorite moves or like a favorite like value add like improvements or strategies? There's a lot of tools in the toolbox sometimes of like, okay, what are we dealing with in this particular situation?
Yeah. I've mentioned this already. The best way to add value is through relationships. And really, the best way to add value is in areas where there's high barriers to entry. Because, for example, doing paint and carpet is, it could be defined as adding value, but anybody in this business can find a good contractor, a good general contractor, have them come in, monitor the work, and make sure it gets done on time and relatively on budget. And so you're adding value there, but the barriers to entry in that aren't high. Conversely, the barriers to entry in having great relationships, treating people right, and then seeing the next deal add value for many years to come on a lot of other future deals, whether like we talked about with sourcing or the execution of it. So I don't want to belabor that point, but I think the high barriers to entry pieces are the ones that we really focus on. The other ones that are becoming more and
Like
more
getting in shape. Yeah, you can't buy relationships, you can't buy health or getting in shape. Like those are things you cultivate and that like that you can.
Yeah, exactly.
Yeah.
And then beyond that, and it's becoming more critical in Southern California infill markets, but entitlement and zoning. We see things like the green zone and other challenges, I'll call them, come into play. And so understanding those, having a working relationship with a local municipality, we've done transactions where there were zoning issues on it. We were able to sit down and really lay out a plan and help the city visualize, here are the options at play, and here's why we want to, reposition it. Maybe it's a logistics repositioning, and most cities' first response is that's a lot more trucks. And so, but there's things that come along with not having more trucks and not doing the redevelopment to a logistics facility. And so you're making sure that the city or municipality and all the stakeholders understand the options, and it's not just selfish. We want to do it because we want to make more money, but brings jobs, tax revenues, and improves the visual aesthetic to the community. That
modernization,
you're
in a lot of ways.
You're balancing that. Again, some of these things do bring more trucks, but they, in addition to that, bring some of these other positives. So I think that's one way where we've added value as well. And then last thing, and it's probably more selfish, really enjoy doing redevelopment projects, not only because we've done well with them and we have some good experience in them, but it's always good to see take old to new, moving many cases, a big part of our strategy is buying older manufacturing buildings and repositioning those to modern logistics facilities, whether last mile or port logistics facilities. And so it's always fun to see personally. You drive by it and you get that personal satisfaction, but more importantly and last much longer is the benefits to future occupants. Again, the jobs brought to the community and pride from the community and turning some of those things around. And so that one's maybe a little bit more selfish, but I think it really goes more broad in who it impacts.
I had an intern that was like, I'm going into a high-end residential because I get to spend my days showing houses on the beach in Laguna, where here I get like a grimy old spider web, like a dark, dingy buildings. And you're like, that is one possible component of it, but there's nothing like new construction. And then when you think of the quality of the tenant or the employer, and then their ability to reinvest in the skills and equipment and in the role and in the job, like it is night and day. So it's more than just like the bricks and the sticks. Fantastic. And then what are you most optimistic about the business and where we're at in the cycle right now?
It's definitely a challenging time, as we've already talked about some of that. But when it comes to industrial logistics assets, the mid to long-term tailwinds in Southern California we're still really bullish about some of the things going on at the ports, e-commerce growth, manufacturing growth, and the barriers that coupled with the barriers to new development. I think that the long-term supply-demand imbalance will continue to play in our favor. And I think that's why you're seeing equity investors line up and want to come into industrial and logistics is those tailwinds. And so our job is to source attractive investment opportunities and execute on them. And if I'm speaking for West Harbor, if we do that right, then we're going to do just fine. There'll be capital out there to do those deals, and we'll play a part in executing on those. So, I think that's where I'm excited. I think that's where a lot of people across the industry are excited. Now, it's going to be really hard because the field has become more crowded. So we're not disillusioned about being the only ones that know this. It's no longer a secret, as you mentioned early on. And so we're going to have to work really hard and continue to grow. But, I think if we do that, the opportunities are going to be there. And so we're excited about having our piece in that and continuing to grow the business and grow the team and hopefully deliver attractive performance for our stakeholders.
Yeah, I love that. It is so fun to hear about like some of manufacturing coming back, even though we are like a repositioning older manufacturing buildings, and not all of it comes back, and it doesn't all come back here. But just seeing that be something that like is seeing increased investment in and across the board and in all sorts of different markets. It's great to see that come back too. Eric, thank you. I don't know if there's anything you want to leave the audience with, or I feel like that was a good intro and a good dive into some of the things going on out there that industrial players need to know about.
No, I appreciate the time. It's always good to chat, whether it's on or off camera. And we're all looking for deals. So we're just, back to work, continue grinding away, and excited about the opportunities ahead of us.
Yeah. Fantastic, Eric. Looking forward to it. Thank you.
All right. Take care. Thank you.
Yeah. Bye-bye. Bye.